Happy morning traders. US markets cracked sharply overnight. Nasdaq fell almost 1.8%, crude oil surged close to 2%, and gift Nifty is quietly negative. But here's the twist. FIIs are buyers, India VIX is below 10, and Bank Nifty refused to break down yesterday. So the real question is simple but dangerous. Is today a sell-on-rise trap, or are we setting up for a surprise bounce? Stay till the end, because today's market will punish anyone who enters without a plan. Welcome back to Wealth Maama, where we don't predict markets, we decode price behavior, data, and smart money intentions before the bell rings. Nifty closed at 25,818, down 41 points or 0.16%. The index opened at 25,902, attempted an early push, but then drifted lower and spent most of the day consolidating. The intraday low was 25,770 and the high was 25,929, clearly showing a range-bound and controlled sell-off, not panic selling. Market breadth was almost neutral with 24 advances and 26 declines, which again confirms distribution, not dumping. Bank Nifty closed at 58,926, down only 0.18% despite global pressure. The index respected the 58,800 zone, with an intraday low of 58,801 and a high of 59,127. This tells us that banks are not breaking, they are only pausing. As long as 58,800 holds, Bank Nifty remains a stabilizer for Nifty. Let us first look at the global cues because they are clearly negative. The Dow Jones closed lower by 228 points or 0.47% at 47,886. The S&P 500 fell sharply by 1.16%, closing at 6,721, while the Nasdaq Composite took the maximum hit, crashing 1.81% to 22,693. This selling indicates clear risk-off sentiment, especially in tech-heavy names. Asian markets are also not providing any relief. Nikkei is down 1.14%, Shanghai Composite is down 0.34%, and DX closed lower by 0.48%. The only mild positive is FTSE 100, which closed higher by 0.92%, but that alone is not enough to offset US weakness. US futures are marginally positive, with Nasdaq futures up 0.39%, but this looks more like a technical bounce rather than strong risk appetite. Gift Nifty is trading at 25,859, down 27 points or 0.10%. The range so far is 25,822 to 25,907, which clearly suggests a flat to slightly negative opening. Do not expect a gap-down panic open. Expect a calm open followed by data-driven moves after 9:30 a.m. Now look at commodities, which are sending mixed but important signals. Crude oil jumped 1.77% to 56.93, and Brent crude rose 1.59% to 60.63. This rise in crude is a negative macro factor for India, especially for inflation-sensitive sectors like FMCG, paints, and aviation. On the other hand, gold fell 0.39% and silver corrected sharply by 1.65%, indicating that there is no panic buying yet. This tells us fear is controlled, not explosive. Coming to currencies, USD INR is at 90.40, up marginally by 0.01%. Rupee is stable, not weakening aggressively, which slightly cushions FII sentiment. Now this is the most important section. On 17th December, FIIs were net buyers worth 1,171 crore rupees, while DIIs bought 768 crore rupees. This means both institutional forces were on the same side, despite Nifty closing in the red. Whenever FIIs buy into weakness, it usually means downside is getting limited, not finished, but controlled. India VIX closed at 9.84, down 2.24%. This is an extremely low volatility environment. Low VIX means big trending moves are less likely. Key levels to watch today. For Nifty, immediate support lies at 25,750. If this breaks with volume, next support is near 25,680. On the upside, 25,900 to 25,930 is a strong supply zone. A clean breakout above 25,930 can trigger short covering towards 26,000, but only if banks participate. For Bank Nifty, Support is at 58,800, followed by 58,500. Resistance remains at 59,200 and 59,500. Sector-wise focus for today. IT may remain under pressure because Nasdaq weakness directly impacts sentiment. Banks are the key. If Bank Nifty holds, Nifty will not fall sharply. Oil-sensitive sectors like FMCG and aviation may stay weak due to rising crude. Avoid overtrading mid-caps today, as low VIX often leads to silent premium decay. What to expect today? Overall, today is not going to be a trending day by default. This is a wait-and-react market, where confirmation after the first 30 minutes is critical. FIIs buying and low VIX suggest downside is limited, but global weakness caps upside. Trade levels, not emotions. That's the complete pre-market game plan for today. If this analysis helped you structure your trades, make sure you check out our daily Nifty analysis playlist, where we break down every session with numbers, logic, and real market behavior. Trade disciplined, protect your capital. And I'll see you in next video. Subscribe to Wealth Maama for daily updates.